Have you imagined an indicator that predicts where the price will stop or break out? It exists. There's a free tool here on TradingView that does exactly that. It identifies the most likely levels of support and resistance and even helps you know the direction of the trend. Today, I'm going to show you how to use this indicator, the predictive ranges by Lux Algo, to find extremely precise entry opportunities. Stay until the end. I'll share a complete strategy to maximize this indicator's potential. First thing, open TradingView and you can use any chart from the financial market. I'm currently on the Bitcoin chart, but you could also utilize the Forex market, indices, among other options. In this specific case, I am using the 1-hour chart. However, you have the flexibility to use any time frame that suits your needs. Navigate to the indicator section and search for predictive ranges. And when this option from Lux Algo appears, just click it and it will show up just like it is here on my screen. And here is the predictive ranges indicator. It draws 3 important zones on the screen. The red zone at the top, which is the resistance. The green zone at the bottom, which is the support. And a central line in the middle that shows the average price trend. When the price nears these areas, it either respects them, leading to a reversal, or breaks through, continuing in that direction. How to interpret this indicator? When the price hits support, it can either bounce up or break and keep falling. The same is true for resistance. The price either rejects and falls or breaks and continues to rise. The central line is great for identifying trends. If it is progressively higher than the previous ones, then the market is in an uptrend. If it is progressively lower than the preceding ones, then we have a clear downtrend. Should you access the indicator's settings, you will find several intriguing features awaiting you. Here, length refers to the indicator's period, allowing you to control the ATR calculation, making the zones wider or narrower. The factor adjusts the bandwidth. A larger factor means levels are further apart, ideal for swings. A smaller factor brings them closer, better for scalping trades. For the time frame, you can either keep the chart's current setting or select a fixed time frame for its analysis. It's a very simple indicator to understand, but now let's explore the strategy I mentioned I'd share, which you can use in conjunction with this indicator to achieve excellent results. But before we continue, many of you ask me which broker I use to trade in the Forex market, stocks, or cryptocurrencies, and the answer is EXNESS. To me, it's the market's best and most comprehensive broker. If your brokers ever frustrated you, you'll understand what I'll say. Many brokers delay order execution. EXNESS offers instant execution. Some brokers charge very high spreads. At EXNESS, the spreads and fees are incredibly low, among the lowest you'll encounter in the market. Have you ever waited days to receive a withdrawal? With EXNESS, your funds arrive almost immediately. And best of all, you can adjust the leverage infinitely as you wish, obviously managing your risk. If your broker freezes, overcharges, or delays payments, it's time to switch. The link is in the description. As I said, I consider it one of the best brokers with the lowest fees on the market. For this strategy, we will be utilizing the Vidia indicator, the variable index dynamic average created by Big Beluga. We're going to come back here again to the indicators section, and we will be looking for the variable index dynamic average. It's the variable. And then we need to look for the Big Beluga version, which is this one down here. Let's add it to the chart. And here in the settings, I like to use this one. In the first period, 50. Then below 20 and the distance here, 2. Then you can click OK and the line will become smoother, helping you to spot the best opportunities within the current trend. The good thing about the Vidia indicator is its volume delta tab. This means that when we find ourselves in an upward trend, such as the one we see here, and the price is continuously climbing higher, the optimal scenario is to observe the volume exceeding 30. This would signify that the trend possesses considerable strength and is in the process of gaining momentum. In the same way, when the chart is experiencing a downtrend, similar to the one we see here, clearly indicated by the red cloud on the Vidia indicator, it becomes crucial for us to observe the volume delta. If the indicator shows minus 30 or less, we can engage in downtrend trading, as it signifies a strong and accelerating trend that is likely to persist. So how do we actually use these indicators together in practice? In this case, notice the price is in a clear uptrend, as shown here by the Vidia, so we have the price moving upwards. What will we look for to buy? Thus, we shall await the price to arrive at a particular juncture and subsequently revert to the support zone, as indicated by the predictive ranges indicator. In this instance, the support zone was located right here, encompassing this entire green area, as indicated by the predictive ranges. And in this specific scenario, we will then wait for the price to move into this zone, which it did right here, and then exit that zone again with a strong candle. Here was a rejection candle, so in this particular situation, I still could have waited a little longer. This specific candle indeed exited the zone, displaying significant strength without leaving a wick. So in this case, I could have opened a buy trade here, placing my entry precisely at the closing of this candle, with the stop loss set just below the lowest point, which in this instance was at minus 0.75, and then position my take profit to target a 2-to-1 upward return. So in this specific instance, the value was approximately 1.25 and the chart specifically moved towards that point, securing us a fantastic victory right here with Bitcoin. In the case of a downtrend, we're going to do the same thing, but in reverse. Notice that here the price is in a downtrend according to the Vidia indicator. And here we observe this entire red zone that belongs to the predictive ranges indicator. When the price returned to this area and exhibited a clear rejection, and immediately after, a forceful candle emerged from this region with significant momentum, we could have initiated our trade entry at the closing price of that candle. Given its substantial size, an alternative entry point would have been at the high point of the candle as our stop. In this specific situation, we aimed for a 1.85% move, setting our take profit at double that to ride the continuation of this bearish trend. The price eventually dropped by nearly 6%, significantly exceeding our target, which clearly demonstrates the exceptional effectiveness of these two indicators when applied in conjunction. The predictive ranges indicator serves as a powerful tool for understanding price behavior, anticipating reversals, and confidently trading breakouts. Test this strategy in the simulator and see how it fits your style. And remember this video is neither an asset recommendation nor an endorsement for using the indicator. You are fully responsible for your results, and the financial market is no joke. It can result in the loss of capital. So be very careful when operating in the financial market. If this video helped you in any way, go ahead and leave a like, subscribe to the channel, and comment more indicators to receive more incredibly accurate indicators like this one, complete with a ready-to-use strategy for your daily trading. That's all for today's video. Thanks, I'm out, and I'll see you in the next one.